This is an intro to Web3, and I know that the class is definitely on blockchain and cryptocurrency, but Web3 is kind of the term to encompass the broader market and just like the industry in general. And really having an understanding of Web3 gives a why for the how and what of blockchain and crypto. So this is where I'm going to start today. Um, and my name is Ashley. I'm the educational programs manager for Metis, which is a layer 2 scaling solution. We can talk more about that later, and CryptoChicks. So I have a background in public education, nonprofit management, and state and local government. Up until like January of this year, I had no experience in blockchain or crypto or Web3. I was a teacher for most of my career. And so the only reason I ever share that is because a lot of people think that there are only coding jobs in Web3. And while if you're a Solidity dev, you will have tons of job opportunities, there's really a greater need for a lot of diverse skills in this industry. So if this is something that is like piquing your interest, then I don't want anybody to feel like there are any barriers to them being able to enter and bring their skills. So I work with CryptoChicks to teach blockchain and cryptocurrency education and startup support. CryptoChicks is a nonprofit organization. We have an academy and a hatchery. So our academy has these on-demand courses, live webinars, and a podcast that teaches the basics. And then we have a hatchery that kind of combines this education with incubator support. So if you have a startup idea, if you need to learn how to develop your business plan or a pitch deck or how to talk to investors, we can kind of connect you with those resources. We have a mentorship program. So those are the two things that we do to kind of bring more, mostly women and kids, but like everybody into Web3 and kind of support you in the development process so that you can be your own founder if that's your goal. If you even just want to learn more about this because you're interested in crypto in general, you're in the right place. One thing is I won't give you any financial advice because I don't want to go to prison. So I'm just going to kind of explain like the mechanisms and maybe some of the ideology behind putting together some of these DeFi protocols or decentralized protocols in Web3. But I won't tell you like what to go buy, when and where, because that's not my job. So we'll talk about Web3 decentralization and then like the opportunities that have come as a result of that. If you're super new to crypto, great. And if you have a little bit of idea, you have some experience and you want to learn more, please feel free to like share questions in the chat as we go, because I'd love to answer your questions and make this content relative to you and what you want to learn. This is a disclaimer in writing saying that I'm not a lawyer or an accountant or a financial advisor, so don't sue me. This is just educational information. Okay, so here we go. So if you've not heard the term Web3 before, you're not alone. Most people are like, what's a Web 1? What's a Web 2? So Web 1, you can think of as the read-only web. So early 90s, there's no searching. You just log on, you go to a website and you read what's posted. Web 2 is as we get further into the late 90s, Google, social media start to come about, blogs, e-commerce, and the biggest thing, data monetization. So if you've ever like whispered into your date's phone ideas for things that you want to come up in their search, that's kind of something that we're hinting at as we move into Web3 is like all of the different activities that we participate in online produces information that is then monetized and you're not getting a paycheck for it. So one of the things that kind of brought this evolution of Web3 was the idea that people deserve a right to privacy and the security of their own data. And if that data is going to be tracked and used to sell them something, then they should at least have a say in that. And if they're going to sell their own data, it should be their choice. And they're the ones that should take the profit. So Web3 is the idea that we're moving away from these centrally controlled companies that really control everything that goes on when you get online. So companies like Google, Facebook, They tend to own a lot of the major platforms that you use on the internet. And they're basically run by these giant servers, these databases that are held centrally. There may be like several of them, but it's a pretty limited locus of control for the internet as we know it for the most part. As you move into Web3, the idea is that it's more decentralized. So in a blockchain network, anyone who wants to can participate and run a node and essentially own a piece of the blockchain. We'll talk a little bit more about what that means in a second. But the idea is that if anyone is going to be controlling their data and their privacy, it should be the individual user, and that there's no one single entity or single point of failure responsible for maintaining the security and the running of a network, the internet. So this is an opportunity for everyone to have a piece of the pie. So until now, again, like I was saying, there's a lot of government regulation, especially when we think about our financial services. There's a small group of people in charge that kind of control the economy, how you spend your money, how things are sold to you, how your data is used. And then there's a lot of control from government entities, from socioeconomic boundaries, political disputes can all impact the things that are accessible to you. There are millions of unbanked people, bankless people in the world, people who don't have access to financial instruments as simple as a microloan. And there's an overall lack of autonomy, especially when it comes to something so central to the way that we live our lives, which is finance. So there's really a lot of approaching someone who holds the keys. And as we've seen, even in our own country, that's left room for a lot of discriminatory behavior and inequity. We'll leave there. So the idea is that in Web3, we're kind of disrupting this central point of control. We're allowing a space for individuals to take place not only in a peer-to-peer network where we can exchange but create our own markets that would overcome geographic barriers, the need for any intermediaries, and it would allow people to take ownership not only of their data, their finances, but the things that they want to contribute to. So where I'm going with this is that cryptocurrency or Web3 in general is a movement beyond like, I have a token, you have a token, let's trade. It's moving further into people being able to create the types of roles that they want for themselves and contribute to causes that they're called to without having to fit into these boxes of working for a company or taking on a job for someone else. So blockchain technology is not inherently decentralized because it can be controlled, like one company or one small group of people can create a blockchain and be in charge of it. But essentially, in a decentralized network like Ethereum or Bitcoin, there are user-owned nodes that are connected by the internet. So this is just a computer, a device. And as you operate to participate in the blockchain, you receive rewards for supporting the network. And you might think of a blockchain as like a magic notebook. That's kind of the way that my brain thinks of it. So in my magic notebook, I have one, and everybody else in my blockchain network also has a magic notebook. When I write something in my magic notebook, it can only be written in pen. I can't change it. I can't erase it. It's there. As soon as I write something in my notebook, it's communicated to all the other magic notebooks out there. They see what it is. They agree. And we can move forward. Everything is written in an exact order. Now, nobody can, if I throw my magic notebook away, all of the other magic notebooks that are in existence, they're still there. They still hold all the same data that was written in mine. So in order to destroy that blockchain, every single magic notebook would need to be wiped out. So the security element comes in with the decentralization piece. There's no one place where all of this information is stored. No one person owns it. There are multiple contributors, and everything is confirmed through consensus. It's secure in the use of cryptography, so people can't go in and hack or change the data that is recorded in this distributed ledger. Cryptography is kind of like the science of keeping secrets, and it's essentially the methods used to secure data on a blockchain would take more time and energy than it would take to crack that exists in the entire universe. Like, since the dawn of time, there's not been enough time passed to kind of crack some of these cryptographically secured information. And the idea of a public blockchain is that it's transparent. So this is really exciting when we think about public goods or public administration kind of use cases. So if you want to see where your tax dollars are going, you can go onto a public blockchain and see where every transaction has gone, what money has been spent for, when it was spent, and you can see the transition and transfer of funds. There are places, there are mechanisms for keeping some data secure on a blockchain, but it is important to know that once you put something on a blockchain, it lives there forever. So this is not a place to store like personal information that you would never want, like you wouldn't want to put your social security number on anything that's going to go on a public blockchain. But yeah, it's meant to be fair and secure and immutable. So from this technology, cryptocurrency is kind of one of the many possibilities, and cryptocurrency was born as an opportunity for people to have this peer-to-peer exchange without an intermediary. If you join this workshop because you're like, I've heard a lot about cryptocurrency and I don't know what's going on with it, it feels like it's a big deal. The technology is sound and it's, yeah, there's so much going on. But probably if you've done even the slightest bit of Googling, you've mostly seen like scam headlines or people losing a lot of money or people using crypto or blockchain networks to like trade on an illegal market. There are a lot of crazy things happening. That's because there is not a lot of regulation right now. It's definitely coming in hot, but it's mostly one use case of a technology that's capable of many things. But it's kind of the low-hanging fruit, and this is the thing that gets most people excited. So the idea of a strong cryptocurrency is that anywhere and anyone in the world would have access to this financial service, this tool that can be traded without the need of a brokerage like Fidelity or TD Ameritrade to create a market and pair buyers and sellers. It's just an opportunity for people to develop their own markets and make things happen quicker and cheaper. It can be transparent. Again, there are possible uses for a private blockchain depending on the kind of data that you would want to store. For instance, if a hospital wanted to transition to storing data about patients on a blockchain, that would not be like a public ledger. That would be something more internally controlled. So the technology has many capabilities, but for cryptocurrency purposes, this is built on a trustless and autonomous system. So let's talk about the two kinds, and I'll kind of explain a little bit about how cryptocurrencies work. So in a traditional financial market, let's say the stock market, buyers and sellers come and they have assets, maybe cash, maybe stocks, and a broker creates this market, and you have to wait for like the right buyers and sellers to come along. They record orders in an order book, they fill them as they can, and then they receive like transaction fees, right? So in a decentralized marketplace, in a cryptocurrency market, everything is managed by smart contracts, which are essentially like if-then computer code statements. They're sophisticated lines of code that explain if this condition is met, then this is the resulting outcome. So smart contracts can kind of manage the job that the intermediary was doing before. So now people can develop a smart contract. Users can deposit funds into what's called a liquidity pool, which is essentially just like a big pool of funds that's managed by this contract. And now people can just trade and interact with that directly. And so this is kind of like the thought process that started cryptocurrency. Was we needed a way for people to transact instantly, cheaply, anywhere in the world, with the perk of being able to do it anonymously if you would like, because there's that privacy and security piece at play. So Bitcoin was the first cryptocurrency released. And I think that my current progress is a little bit dated, but we're almost, it's all coins are released by mining. And we're at the whole amount of Bitcoin that will ever be released is 21 million. And we're currently a little over 90% of progress in that. And so essentially what mining is people will have these hardware and software programs. They have to develop into all of this hardware because they're competing with one another. They run these software programs that solve these really complex mathematical problems. And whoever solves it the fastest essentially gets the reward for the transactions that are going on to this blockchain. So mining is the way that multiple people participate in cryptographically securing the network. The reason I say they like expand into all of this hardware is because the rewards have been really high for this, especially in the past. They're smaller now. Miners are making less money than they did before. But people would invest thousands and thousands and thousands of dollars in Bitcoin mining because they were earning this passive revenue from it. Ethereum, on the other hand, is probably the up and coming name. There are definitely people who are like diehard Bitcoin maxis. But Bitcoin is really mostly used just for digital exchange. So it's just a currency for peer-to-peer exchange. Now, Ethereum is really more like there's that digital currency element, but there's also this smart contract platform. So people can now build their own cryptocurrencies, build their own banks, build their own protocols on the Ethereum network. They've recently transitioned their consensus mechanism to proof of stake. If those terms don't make any sense, we could talk about them later. But essentially in a proof of stake network, rather than investing a lot of time and money up front in trying to solve these cryptographic problems and get the right answers so that you can add on to the chain, in proof of stake, you basically put up a large sum of money and agree to verify transactions on the network. If you act maliciously, then your funds are staked, you lose that money. And if you act with integrity, then you continue validating and earn rewards for the transactions that you successfully add to the ledger. So there's more skin in the game in a proof of stake when it comes to just like putting your money up. So there is some barrier to entry for people here because it can be really expensive to get started. You can't mine someone else's currency, right? I don't quite understand the question. So you can mine, like if you wanted to mine Bitcoin, you could. That's not your cryptocurrency. You could definitely do it. But not all cryptocurrencies are mined. So some cryptocurrencies don't have a mining or a staking. Some people can just create a token that's called a utility token, which means they only use it for trading or to use on their specific platform. You might be able to trade those or even stake them, which means you essentially like lock them up into, for lack of a better word, like on a Web3 bank account, and it earns you interest or rewards. But you can't mine, not every cryptocurrency is secured by mining or proof of work. So when I say proof of work and proof of stake, these are consensus mechanisms. This is the way that all of the people who have the magic notebook agree that what's written in mine, it matches what's written in everybody else's. There are a lot of different ways for people to do that. Mining was just like the first one that came about with Bitcoin. And it's the way that Ethereum worked for such a long time. But if you followed any Ethereum news lately, if you've heard of the word the merge, that's been recent, they transitioned to this proof of stake where instead people will just lock up a certain amount of funds with the promise that they will validate the network with integrity. And some people say that because that barrier to entry is so high, it kind of removes the equitable piece, which I think is a valid argument. But the reduction in energy consumption that it takes to secure that network is like pretty solid. So I had a figure that I don't think I included in this presentation, but it was just talking about like the comparison of the amount of terawatt hours that the banking industry uses versus Bitcoin and Ethereum, because it also used proof of work and mining for a while. But since it's transitioned to proof of stake, since people don't need all of that hardware setup to run, then the energy consumption for that network has gone down by like over 99%. So that's the goal with the transition, is to make it a more eco-friendly form of currency exchange. Okay, so this is a little bit of, this might be like moving on to our next level of content before we're quite ready, but I'm just gonna throw it in here in case there are questions about how this all works. If anything, just to give your brain something to chew on. So blockchains, as they're developed, they face what's called a blockchain trilemma. So the idea is that the more decentralized a blockchain is, the more secure it is, right? Because the more magic notebooks there are out there in the world, the harder it's going to be to track them all down and kill them if we want to like get all this data to disappear. So the more nodes, the more participants in a network they are, the stronger it is. But the more decentralized it gets, the more we have to focus on those consensus mechanisms to make sure that that network is extremely secure. And the more we do that, the more expensive and the slower it is to process transactions. So if I've got hundreds of thousands of devices that have to like agree to a transaction being added to the chain, you can imagine how that could get slow. And so when we're thinking about a company like Visa, who processes 2,000 transactions per second, coming onto a network that needs that kind of scalability, that kind of throughput, and that's just one organization, you can see how quickly using a blockchain could be slow and expensive. So this is definitely the case with Ethereum. If you've ever made a transaction on Ethereum, or if you've seen any news about like people paying high gas prices for NFTs and you didn't know what any of that means, essentially as the network gets really clogged, or there's high traffic, the longer there are people using the network at the same amount of time, it gets more expensive and slower. And so the gas fees that you pay, essentially the transaction fee, can get really expensive, sometimes more expensive than what you're actually trying to do, buy the NFT or send the money or whatever the case may be. So layer 2 networks like Metis, some of our competitors might be Optimism or ZK Sync or Arbitrum. These are other blockchain networks that are essentially built on top of Ethereum that bundle transactions up and pass them through to Ethereum as one, so that it makes transactions go much more quickly and cheaper for everyone. So the idea is that they're still using the decentralization and security of a strong and robust network, but making it easier to access. And my dog is really sad right now, so if he's popping on screen, apologies. It's just Yazoo. Okay, so yeah, Metis is the company, one of the companies that I work for, and they support CryptoChicks, and essentially they are a layer 2 network. So they just make scalability and security easier for larger transaction volume. So you might think of it like this: if you are using the Ethereum network, when there's a lot of traffic, then there's slow speeds and it's expensive. Using a layer 2 like Metis would mean that you can go faster and cheaper. So I kind of mentioned that cryptocurrencies are just kind of the one low-hanging fruit use case of blockchain. There are so many other things involved. DeFi, or decentralized finance, is kind of what most people get drawn into, and I can see why, because I think especially in our culture, if y'all are in Texas State, I lived in San Marcos for several years. So like the kind of the spirit of the times of noticing the haves and have-nots and the access to financial tools. That is something that is really attractive to people. The idea that you can create financial freedom and autonomy without needing to go through a lender approval process or use traditional banking. But NFTs are pretty cool. They are used to build community. If you're an artist, you can earn royalties in perpetuity. You can even use them to mint an on-chain identity. The idea is that it's non-transferable. It's or not all of them, but non-fungible, meaning they're unique. They can be non-transferable, but you can also trade them. So NFTs have like massive capabilities. We can talk more about that after I get through the presentation, if anybody wants to dive deeper there. DAOs or DACs, or decentralized autonomous organizations. DACs would be decentralized autonomous companies. They're kind of like evolving, but essentially it's a form of organizational structure where anyone in the world can contribute to any kind of organization, regardless of socioeconomic status or geopolitical barriers. Then also like gaming and metaverse have been really blowing up in the Web3 space. Not only is there this global connectivity and access, but developments that are starting to like add financial elements to gaming and starting to add this interesting game theory of how do we incentivize people to participate in all kinds of industries. So Web3 is really like brought together this global marketplace of creators, which is really exciting to be a part of. I just need 2 minutes. He's like losing his mind. I'm going to let him outside. I'll be right back. Sorry. Okay, apologies. Thank you for your patience. Okay, so just to kind of dive a little deeper into DeFi, into the cryptocurrency trade in general, you might think of DeFi as like a buffet versus a traditional banking industry as more of a traditional restaurant. If you go to a regular restaurant where you need to make reservations, you have to wait to be seated, someone has to tell you where you're going to sit. They give you a specific list of options that you can choose from. You pay a price, you have to wait for that to arrive. Then you typically pay your bill, plus you tip the server. In a buffet style or a decentralized finance, you kind of like choose whatever you want. You have this buffet of options and you can decide every little thing that you want to put on your plate, everything you want a taste of. It's a lot cheaper because you're serving yourself. It's faster because you just go and get it. It's already laid out there for you. And you're not having to pay for this intermediary, the server, to bring what you want to the table. DAOs are essentially like it's like a group chat with a bank account. It's kind of how people describe them. So really, it's just a group of people who come together and they have a common mission or a goal that they want to work toward. So they pool their resources and they work on this mission. Now, they're human organizations, so they're definitely flaws when it comes to effectiveness and efficiency, because you've got to still have the right people doing the right things to make anything work. But the rules of the organization are run on a smart contract. So a lot of the governance issues, the way that earnings are distributed, the way their treasury is managed, all of those things can be governed by code. So there's less room for people to act maliciously. There's more transparency, and the idea is that it's just a little more fair. Anyone can get involved. If you are a token holder of a DAO, then you have a say in how it's run. DACs are kind of like this up and coming thing in the world of DAOs, where regular company functions would be available for organizations on chain. So things like task management and payroll would be automated. But that's something that's in progress. It's not really being used in practice yet. So it's just interesting to consider like all the different possibilities of digital assets, from cryptocurrency tokens to NFTs. More and more our lives are digital, right? Like when I take photos on a vacation, I'm not printing them out and like putting them in a scrapbook anymore. I put them on my Instagram. And when I'm, you know, like wanting to find new music, I don't go to a record store. I mean, unless it's a Sunday afternoon and I have a coffee, but like typically I get on Spotify. So because we're so digitally connected, owning things in a digital space is more and more valuable because we have this internal shift of what we consider to be valuable and how we want to demonstrate that. And so there are a lot of opportunities out there. Whether or not you decide that you want to dive into DeFi and start trading cryptocurrencies or develop your own Web3 startup, it really could just be a tool that you use to source talent from all over the world. It could be something that you use just for enjoyment because you really want to have an NFT of your favorite artist's song that nobody else gets to own. It could be that you are looking to have a store of value beyond the capabilities of the US dollar. And so there are a lot of avenues that a person can take. This is just kind of like a broad overview, and we can dive deeper into any specific topics as we go. But before I kind of wrap up this overview, I want to explain a little bit about the difference between the ethos and the culture of Web3, because I think the culture has given it a really bad name and has turned a lot of people away. So if you think about like the first thing that comes to your mind when you think of crypto, maybe like a dude who wears sunglasses on the back of his head, and his name is Chad, and he talks about dog coins. All of that kind of like hit me in the face when I first started at this job. And I was really overwhelmed because I thought, I come from a public service career. This is the opposite of what I'm looking for. But when I really started to zoom out from the cryptocurrency and focus more on the thought process and the movement that is Web3, the ethos really stood out for me. So the idea is really more that it creates a space to empower the individual through collective support. It transcends those boundaries that some people would be barred access from tools that many of us take for granted. And it's an opportunity to really provide a more equitable future. So I think that as you learn more about it and you start to think about the things that you are really interested in, I think you'll find that there is an opportunity in Web3 to make it really interesting and to collaborate. So that's all for my long spiel. I know that a lot of people will be watching this recorded. So if you have any other questions in the future, feel free to like hit us up on social media. Victoria also has my email address. I'm happy for her to share that with anybody. And if anybody who's actually on the call right now has questions, I'm down to answer.
I have some questions. What is the best way to like start learning about actually how to use Web3 or how to, start working with blockchain? What is the best way? Because it feels so overwhelming, especially at Texas State. We don't have any avenues to learn about it. So what do you recommend?
Okay, so are you thinking about like ways to use blockchain as like somebody who has a wallet and trades cryptocurrencies, or someone who wants to build and develop in Web3?
Build and develop.
Okay, so I would start by being an individual user, because I think the biggest gap right now in Web3 is the user experience. So we've got a lot of really incredible development, but not a lot of like intuitive user interfaces. So I would start by not giving anybody financial advice. Go to a centralized exchange. A centralized exchange would be like Coinbase, and choose to buy your first crypto asset, whatever that may be. Set up a wallet for yourself. I'd be happy to do a course on like this intro part where we talk about where to find centralized exchanges, how to set up a wallet, what the different kinds of wallets are. And then from there, think about the things that you're interested in. Are you doing it for, do you want to understand how the financial instruments work? Then go to a DEX, make a trade, try your hand at farming or staking. There are some borrowing and lending opportunities in DeFi. You could check those out. If you're getting into it because you're an artist and you really want to learn how to create something there, then I would join a DAO. So if you have some passion beyond like, I want to just learn the financial tools, then join a DAO that is aligned with those interests. I would get into their Discord and their Telegram. I would ask a lot of questions. I would get to understand the organizational challenges. And if you want to learn Web3, you should learn Solidity. Solidity is the programming language of Ethereum, and it's probably the most like widely applicable one. If you have like 1 to 2 years of regular coding experience, that's probably enough to start learning Solidity. That's where I would get started. But getting involved in the community is the first step, because you really want to understand the problems of the groups that you are most excited about, because it is so broad and overwhelming that before you start learning to develop, I think it's probably a good idea to have a feel for the landscape.
Thank you.
Yeah. Anybody else? Cool.
All right. Well, thank you so much for joining us, Ashley. This has been like just my absolute first exposure to any of this. And then, like you said, I'm really happy you included the ethos portion too, because there is so much like that you hear about crypto or blockchain, and it's kind of, you know, like wrapped up in this like cultural perspective skew thing. So it's really cool to actually learn about just the power of it.
Yeah, thank you so much for having me. I appreciate that you liked that part, because that's always what I want to lead with, because it's really easy for people to get into this because they think they're going to learn a lot of money or earn a lot of cash. And not that it's not possible. Definitely there are 18-year-olds driving around in Lambos because of crypto trades. But it's just really important that you know what you're getting yourself into before you get started, because a lot of people lose a lot. So yeah, I would love to answer more questions. Thank you guys for popping in the chat. If you want me to cover any specific topics, like I can talk a little bit more about the mechanics of a blockchain network. I could talk more about like kind of setting up your wallet and getting an introduction to where you would do a buy or a trade or any of those things. And then if anybody has, you know, NFT aspirations, or they want to learn about Web3 startup processes, anything at all, I'm here and would love to chat with you and share more. So thank you so much for having me.
Thank you. Yeah, I think doing like a wallet workshop in the beginning of next semester, you know, I think right now, like I said, everybody, like students just have so much on their plate, but doing like a setting up your own wallet event at the beginning of next semester, I think that would be really, really awesome.
Yeah, I'd be super happy to do that.
Awesome. Well, hopefully we will see you sooner than later, Ashley. Thank you so much for joining us.
Yeah, thanks everybody. Bye.
Bye.